From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, it's Monday afternoon. This is the COB. I'm Nadine Blaney.
I'm Kyle Rodder. It's been a pretty quiet start to what we're expecting to be a pretty epic week, really. Down slightly by the end of trade, but I would say the calm before the storm, perhaps.
I think so. I think everyone's just taking a bit of a breather on this Monday. The market sure did, didn't it? Down by about 0.1%. That's the CIBO Australia index that you see on your screen. The last of the day's trades are still going through the ASX, so we'll revisit that in just a moment. But look, despite that real lackluster performance, I'm not being too cruel, am I? No, yeah. There was actually, a few sectors that really outperformed.
Well, 9 of them did finish higher, or at least, sorry, they were. I'll double check now, but they were higher with about an hour to go. So we'll call it 7 now. Okay. A couple have slipped into negative territory, but only by a fraction. But it was, well, really the materials that weighed on everything. So I'm not sure if you can infer much from that necessarily, but down by 1.3% offset some gains in the energy and real estate sector, which were, well, relatively meaty. Yeah,
we'll get there in just a minute. Look, the ASX was pretty flat today as one of our key themes. Also, we are just hanging out for these rate decisions, aren't we? From the FOMC, from the ECB, from the BOJ.
Yep.
Hawkish hike is what I'm hearing from the Fed. Not hawkish,
dovish. Dovish hike.
Dovish hike.
We're off to the races.
You were going to let me get away with that, weren't you? Dovish hike, and likely a change of language coming from the ECB. I had a chat with Isaac Poole from Oriana Financial Services. If you haven't seen that interview, he lays it out and also gives a few, where he's putting his money, of course.
Interesting, yeah. It's going to be fascinating because, they told us in their latest statement of economic projections, and of course we're not going to get such a document at this meeting. Well, most Fed members think there's 2 more hikes to come. The market says, no, you've got 1 more to go. So we'll see if the Fed relents perhaps to market pricing or perhaps pushes back slightly.
Now, I also saw a headline, if we get our 3 themes up on screen. So we've got confirmation coming from the federal government that there is going to be a budget bonanza.
I saw that during the day. We've got another 20 bill in the coffers, I think.
Yeah, so high commodity prices. Obviously, a lot of people in work. We learned that last week with that jobless rate near historic lows. So the tax take is looking pretty good. So, hey, look, that's good for us all, I think.
Yeah, well, we'll see what they do with the money, I suppose. I guess if you're one that thinks that public finances are important, that you should pay down debt, then, well, there you go.
All right.
Pay it down now.
Energy was the standout performer today. And it wasn't just sort of oil and gas, but Whitehaven Coal, New Hope were amongst the best performers really throughout the day today. No news that I could see associated with those 2 names in particular, but we do have a lot of these quarterlies coming through, and I suppose that was part and parcel why we saw some of the worst performers. Core Lithium, South 32 got hit really hard.
Yeah, that Core Lithium story, I suppose. I think it was a production update. It was disappointing, and the whole sector sort of seems to, an activity update, I should say, and the whole sector seemed to follow suit. So interesting too. We might touch on it as well. South 32, not on that screen there, also having a poor day, despite the strength that we've seen in broader energy stocks.
That's in our corporate rep. Kyle, let's get to the REITs. Look, I read that article in the Fin about office property. Many people in the office here did as well. Interesting to note, even with the RBA meeting next week and a lot of negativity around office property, one of the best performing sectors today.
Yeah, it was, and I can't give you a good reason, but nevertheless, maybe a bit of a bounce there. Some of the interest rate sensitive sectors have moved higher after, what was some pressure on them at the back end of last week after those strong jobs figures.
Discretionary retail is another sector that outperformed the broader market. So I think that if we take a quick look here at the next page, not working. It really, all of the good news was offset by what happened with the miners. It was, to your point, lithium, but it was also the big miners. Yeah. When you have BHP down by 1.6%, it's a tough day on the market. And here's that picture of lithium there for you.
There you go. And some big moves, 15% on that news Allcom as well. And Sienna Mining down 10.3%. So pretty meaty stuff there for the lithium space.
Okay, so South 32. Sorry, Kyle. We've pretty much covered it. But out with a production update, huge impairment related to one of its projects in Arizona. So cost blowouts, still talking about some damage being done by supply chains. inflationary pressures being felt everywhere. And South 32 by, it looks like the end of this session down by, more than 3%. So that's a big disappointment there coming from South 32, which of course was the stock of the day.
Fittingly enough, we had David Lane and Daniel Ortiz having a chat with David Koch about whether they'd be a buyer of South 32 right now.
The EV cycle, the renewable energies, and being important. So yes, I think it is a very good company, and as you say, management over a long period of time have been very, very good. So it's a company that we like as far as a portfolio stock. We've got a hold recommendation on it at the moment. Without speaking for the analyst, I guess we'll see what the reduction in the share price does as to whether or not they change their view and look at maybe accumulating some more at lower prices.
Doing all the right things, they're probably just heading into a bit of cyclical weakness in some of their key commodities. I'd probably call out the met coal division as being arguably the most at risk, as there's a lot of supply coming online there. So that's actually, if you look at the kind of proportion of revenue and profits from South 32, that's one of its biggest contributors, and I think that's probably a little bit at risk near term. So we're not in the stock at the moment, but certainly view it as high quality, and would look to buy it if the shares head lower.
It's like anything with those sorts of stocks, it's about timing a lot of the time, and maybe the time's not necessarily now, but it's a turn in the cycle and maybe the time will come.
All about timing. Josh Gilbert from the COB joining us now from eToro. Josh, welcome to the program. This market today, is it just a watch and wait scenario because there's so much to come later in the week?
Markets didn't really fancy doing much for us today, did they? Not much relief from Wall Street on Friday either. And as you say, I think we're just sort of going into that risk-off sentiment. I think that's really prevailing. We've obviously got such a massive week ahead. I think that there is that sort of bit of a setup coming, getting out of any positions that are maybe the investors are overexposed to. But struggling for a little bit of direction in terms of, we're waiting on that sort of key data. We didn't really have anything come out that was going to significantly move that market. But I think this is probably going to be one of the only days that we see a flat day this week. So maybe we should take that on board and cherish it. It seems that the volatility is certainly going to pick up later in this week. But as we say, energy sort of led the way today. Oil has had a great couple of days. That's up more than sort of 3 or 4% in the last 5 days as well. Had those lithium names come under pressure today. Obviously, Core Lithium with a bit of a weak trading update, and also those new lithium futures that went online on Friday in China as well, plunged, which obviously put lithium miners under pressure on Friday as well as today as well. So a bit of a weak start to the week, but I think, as I say, that's going to be the only flat day we see this week.
Interesting point there about the lithium futures, Josh. But just moving on to what we do have coming up in the week ahead, like we've already said, it's central banks, but it's, I guess, that all-important guidance as to where things could go from here.
Absolutely, and it is a huge week. I mean, I don't think weeks do get much bigger than this, really, especially if we take into account the inflation data that we have here. We've got US PCE as well. We've got obviously earnings. We sort of start to kick off reporting season here as well with Rio Tinto. So it is huge. The Fed, ECB, BOJ. But I think it's all going to be about that sort of guidance, especially when we look at the Fed. 25 basis points is essentially nailed on right now. And I think that since we've obviously had that last pause, I think some of that data that we've got from the Fed has sort of been mixed, but ultimately similar to what we have here. We've got resilient labour markets. So I think that there is conversations to be had of a dovish hike. But again, I think Jerome Powell is going to sort of reiterate that the fight against inflation isn't done. I think there's still going to be comments from him that says there's still more work that needs to be done there. I'm not sure he's going to give this market too much, because if he does give an inch, the market is certainly going to take a mile. In this sense, we're not too far from record highs on the S&P 500. But at the same time, we are seeing inflation move in the right direction. We had core inflation that certainly moved in the direction that the Fed would like, which has been their headache for for the last couple of months as well. But yeah, I'm not sure, Jerome Powell is going to sort of let up too much. I think he will sort of reiterate that point that he still does think that Fed members believe that there is, another hike left in the tank, because this will be one of the two that he'd mentioned at the previous meeting as well. So I'm not too confident that we will get a dovish hike. I think he will still sort of keep his foot on the gas for the time being.
Yeah, all right. Well, let's see how the market reacts to that. We will see. Josh, it's complicated, isn't it? And made more interesting by the fact that we've got a lot of these really big tech quarterlies coming through this week. And whilst we're talking about a soft landing, even just the fact that Microsoft Australia has cut more jobs reminds us, that even these mega tech companies that have really been driving the market higher, like, they're not immune to the slowdown that is being experienced in the broader economy.
No, absolutely. I mean, the bottom line here is that I think the results that come into this earnings season, they've got to be solid, and the outlooks are going to be just as important. I think big tech does have the potential to sort of keep outperforming in this market, particularly with the AI tailwinds that we've got, because there's no bigger names in AI at the moment, especially if you look at sort of Microsoft with OpenAI, Tesla, in AI with FSD. But these companies aren't going to not face challenges. There are going to be hurdles along the way, and we saw how anything but near perfect results will get punished in this market. Tesla and Netflix, last week, those results weren't, they weren't terrible. They weren't the best, but I think any other earnings season, I think the markets take it in a different light. I think, Tesla set record revenues for the quarter. Netflix had a huge beat on subscriber numbers. Every earnings season that I've followed Netflix for the last couple of years, everyone sort of puts aside revenue growth and all they focus on is subscriber numbers, but that wasn't the case this time. So yeah, I think anything but perfect is going to be, met with, it's going to be punished ultimately. I think a big name though, I think for me to watch this week, I think it's going to be Meta. We spoke about job cuts and efficiency. I think Meta has sort of been the standout for that. I think this is the first time that they're going to report earnings that have grown in the quarter for the first time since 2021, and that just shows that payoff of the year of efficiency from Meta and Zuckerberg. Obviously the Threads platform that went live obviously in Q3, but if there's some guidance there onto how that's going to help guidance into the future and how that's going to help the business, maybe that will offset some of the weakness we probably see from its metaverse venture at the same time.
Hey Josh, I was speaking with somebody from another platform this morning, and they were saying that there's a bit of a buzz back on the platform. More buys, like the buy-sell ratio is in favor of buys. I think about 67% buys. Is that what you're seeing on eToro? I just think it's a really interesting, insight into where sentiment is. And also, this person had said that it was U.S. equities that are getting the most attention. Is that similar?
Yeah, I think we've seen that investors have lost a little bit of confidence in the second quarter from where they were in Q1. I think that came from this huge rally that we'd seen in Q2. We had a little bit of uncertainty around sort of rate hike expectations. I think particularly here in Australia, that's when we saw the RBA sort of be a little bit more aggressive than I think markets were expected. So I think we saw that investors lost a little bit of confidence in Q2. But I think what we are starting to see is that I think investors are now believing that what this year has shown is that it's really important to be in markets. I think there's always something to be worried about in financial markets, and as you guys will absolutely know, some of the best days in markets can be missed if sort of sat on the sidelines. And I think many people would have been sat on the sidelines waiting for an opportunity or just calling this a sort of a bear market rally, which it obviously hasn't turned out to be. It has been turned out to be a complete sort of bull rally, and I think that's really important. I think investors are, as I say, realizing that they're wanting to stay invested. They're finding those quality names, and we also are seeing them take sort of that contrarian view as well. We're seeing a lot of interest in some of those beaten down sectors, those interest rate sensitive sectors as well, such as real estate. We're starting to see a lot of interest pick up in those sort of sectors that, as I say, have been beaten down, with those investors taking that sort of contrarian view at the same time.
Josh, really appreciate the wrap as always. Have a fantastic week, and we will touch base soon. Josh Gilbert there from eToro.
Thanks, guys. Have a great week.
See ya. So we have touched upon a few of the market leaders today. It's just one of those sessions that as far as corporate news go, there wasn't a ton, but we did have a broker note out on Telix Pharmaceuticals. It got hit pretty hard last week after it updated on its quarterly. I think it was Wilson's that said the market missed the cost-cutting measures that have been put in place by the company. And yeah, so recovering from last week's sell-off.
Yeah, and some of those coal names continue to perform really well. So New Hope and Whitehaven higher, 3.8, 3.5%. In fact, I might even just, as we talk, see if Coronado is continuing to climb too, because it was up the top of the market last week at different stages, but we're seeing some strength coming back through coal prices and the underlying, coal prices and the stocks associated with them. So Coronado was well up 2.55%, so some strength there today.
Yeah, Jefferies maintained its buy rating on Coronado today, even though it cut its price target. And also did warn that profits will be lower. It still likes it as an investment. Laggards, shall we? What's the theme here? It's pretty obvious what the theme here is.
Yeah.
Core lithium, really getting
point
hit
Josh was saying about the lithium futures markets. Perhaps these we'll be able to maybe keep a little closer eye on that as a leader or leading indicator for what some of these stocks do. A little bit more transparency in pricing now, efficiency in the market, perhaps.
All right. Laggards in the small to mid cap space today. Again, actually these are leaders. Don't want to take anything away from Freelancer, up by 14.5%. And other than that, we've got some of the laggards in that small cap end. And again, it's just sort of, some of those in the biotech space, Alcidion, I'll be looking into that. I don't know if it came out with a quarterly today, but Dropsuite as well, off by 11%. So, interesting to see. That's a bit more of a motley crew of companies there. So Alcidion, we'll keep an eye on that one. I'll look into it for you. Today there wasn't a lot here. You spoke with Warren Hogan, who's economic advisor for Judo Bank, about the PMIs here. So we'll get some PMIs around the traps tonight. We do. And I think the consistent theme is just sort of a modest softening in activity, especially in the services sector. And what was interesting with Warren too is that, he's been pretty harsh on his assessment of the RBA's policy decisions and then perhaps the directions the economy is heading. But he sort of said that, a soft landing is certainly, from the data that was in the PMI survey this month. Yeah, he said it's fair game. So really quite optimistic that we're on the right track here. So we'll be looking, Japan also has a similar, its survey out, sort of a similar story. All those out of the UK and the US is sort of expected to be the same. So we'll get a test of that soft landing narrative perhaps tonight. That interview is up online if you'd like to hear what Warren Hogan had to say. It's on the big picture today, wasn't it? It was on the big picture, and we spoke to Jingyu Pan too from S&P Global, who obviously is in partnership to produce that. So we got some interesting insights there from economic activity. I'll go back and watch that again. I had it sort of in the corner of my eye this afternoon. But yeah, you know that you can go to our website and just search any interview by experts or by topic, but also on our website, you can just look for the big picture. Okay, what's on tomorrow? Well, tonight, I guess it's not sort of one of those blockbuster nights as far as... I thought I'd stick this one in. I dropped it on you on Friday and I didn't tell you that it would be in there, but nevertheless, I love this in Earnings Whispers. You had the wrong one in there on Friday. No, it was the right one. It was the right one. It's just you got to look all the way across to the Friday. We've done most of the good ones last week. It was probably a bit redundant. But anyway, here's the full week this week. Not much exciting, but you can see there after the close Tuesday, Microsoft, Alphabet, Snap can sometimes be a barometer, Meta after the close on Wednesday. Obviously, you can do your own reading there, but it's just going to be a massive week of reporting. Not so much tonight, but again, we'll gird ourselves for the week ahead. Hey, Domino's Pizza, giving us a little taste of things tonight. All right, tomorrow, we've got a great day for you. We've got the Bank of Japan out with inflation read. On Friday, the inflation read did come in higher than expectations there. But again, another pretty quiet one here locally on the macro front. Still those quarterly production reports, though, coming through. Newcrest will be the one to watch. So we'll have an eye on the gold miners, especially as we start to see some of this, a little bit of weakness over the last few days in the gold price with the dollar jumping, but we'll see how we go. Yeah, and Newmont, if you remember, Newcrest got smashed on Friday, I think it was, when Newmont disappointed when it reported. So and that's the thing, with a lot of these US earnings, there are these connections with local companies here as well, which is always interesting to keep an eye on. But look, I think we've covered pretty much everything on what was a pretty quiet day. I mean, the market, as we said, the S&P ASX 200, the COB Australia Index finishing marginally lower, but it looks to me like that's the lows of the day.
Yeah, basically. But still above 7,300s. Again, we're sort of tracking sideways and have done for about a week. So one would imagine that if we are going to find a direction, it's going to be in the next few days, and some of those macro and micro event risks will send us one way or the other.
All right, well, we've got great guests lined up for you tomorrow, and we spoke with a whole heap of great guests on the program, on the live stream today. Please do catch up with some of those interviews online tonight, and that's until we see you when we're live tomorrow morning, 9:30 in Sydney.